right. So yes, number one, what's your intention, right? Why are you doing this? If you haven't written that down already, then after this call, make sure you just take 5 minutes to figure out why you're doing it. Are you saving towards a mortgage? Do you want to buy a mama house? Right? Do you have a goal for a car that you want to get? And the second thing I'm going to talk about is without the weekends, there's 94 days left in this year. Right, 94 days. It does not sound like a lot of time. But again, like I said on the last call, we spoke about this. Someone had their target every day and they were overachieving on the target. It gives you direction, all right? It's like a boat. If you are just going left and right with no direction, you don't have a country that you're going to, you'll just be in the water forever. Right? So what's your direction? What's your goals? 94 days left to the end of the year. You need to make it count. I'm making it count. I'm showing up every day. I'm taking all the signals. I'm doing my analysis. I'm staying up late. I'm trying to learn as much. I've been doing this for 9 years and I'm still trying to learn more and more and more about trading every single day. Okay. If I'm doing that and I'm 9 years deep, you're going to hear from my business partner who's been doing this for a long time as well. Right? If he's still doing that, then why are you not? Okay. Because copying and pasting with these signals, of course, it's very easy to blow your account and just think, you know what, I'm done. But that's not the mentality. Okay. Number two is you want to have rules. When you're trading, you want to have rules. Okay. For me, if you're new, I always tell you every trade you take, have your stop loss and aim for take profit too. If you're brand new, if there's anything you take from this call, stop loss, take profit too. I want to drill that into your head. That needs to be your default setting, right? If you don't know what to do, if you're not sure about a trade, if you're not too sure about the analysis, TP2. Okay, I was doing this analogy from my good friend that just got started the other day. With these take profits, it's like a 100-meter race. TP1 is 100 meters, TP2 is 200 meters, TP3, 4, 5, that's 400 and 500 and 1,000 meters, right? Now, if I'm running towards TP1, if I'm running a 100-meter race, there's more likelihood of me crossing that finish line, even if I've never ran before. Why? Because it's not too far for me to go. All right. So it's not far for me to go, but the profit I'm going to make is very little because it's a shorter distance. That's the exact same thing as TP1. TP2 now is a further distance, right? So if you're brand new, if you're unfit, you've never ran before, it may be harder for you to actually get to 200 meters, but it's more than likely. Now with us guys, TP2 is the sweet spot. And I think when I'm watching athletics anyway, it's my sweet spot. I love watching 200 meters because 100 meters is just done too quick. 200 meters, there's a bit more going about it, right? So that's what you got to think about. TP2. If you want to go for TP3 and 4 and you want to hold those trades, I'd say wait till you're a bit more experienced. You're a bit more sure with your confirmations. You really understand zones. And that's what the second half of this call is going to teach you about today. But I'd say wait for that experience. But if you're brand new, it needs to be stop loss, which is essentially your seatbelt when you're driving. All right, God forbid, I haven't had any crazy crashes. But if you have a crash and your seatbelt's not on, you feel the repercussions. All right, and that's the same thing with your trades. Tommy said he made £600 today and he had two stop losses. If he didn't have those stop losses set, then his £600 could probably have just been £200. That's the importance of setting stop losses. There's been so many times I've blown my trading account in these 9 years, and it's because I didn't set my stop loss. So that needs to be your rule if you're brand new. If you're a bit more advanced, then of course you can have a lot more fun with this, right? We're going to go into fair value gaps. We're going to go into support resistance. There's certain things you want to see line up before you take that trade. So that's step number two, right? Rules-based trading. Number three, again, speaking about Tommy, because again, it's his first day today. He made £600, which is incredible. But after hitting these stop losses, he could have been very emotional. Now, there's two things that your emotions do. There's either the emotion of fear or there's the emotion of greed. I'm going to explain both of them. If you're brand new and you get the emotion of fear, you're thinking, I've hit a stop loss. I've lost £100. I'm not trading again. I don't want to trade for the rest of the day. Because now my £600, £500, I'm happy with £500. But then you got to think about with these signals and how accurate they've been, if I keep going, like the next signal that we sent straight off the back, it went straight to TP2, all right? It went straight into TPs because there was a buy straight after that. I think we got into the first buy a bit too early and then we caught the second buy and it hit TPs. Now you got to understand if you're looking at rules-based trading and you have your trading goals, if you have your set goal for the day and you haven't hit that goal yet, then guess what? You go again. Okay? You go again. But then there's also the emotion of greed. And this is when you've either hit a stop loss or you've missed your entry, right? And the trade's gone, but you're like, no, it's that TP1. I've just missed it. It's that TP2. I need to get in, right? Look, for that instance, you got to remember that trading is like catching a bus. There's always the next one. there's always another signal. Today was our quieter day. We had super amount of pips caught. We sent about 4 or 5 signals. We didn't send crazy amounts of signals, but you still have seen everyone in the chat has made a lot of money. And guys, it's not about how many signals you take. It's about getting good at the signals, taking the signals so you know how to maximize your profits. And the longer you're here and the longer you're plugging into these calls, the more you'll learn about that. All right. But get a better at the emotion of greed, okay, and the emotion of fear. I love Angel because she said this on a call a couple of weeks ago. She said, throw your fear in the bin. And that's absolutely key. Okay. Never trade when you're based on your emotions. And when you have your goal set and you know where you're going, it throws out your greed and it throws out the fear. Because, you know, if my target's not done for the day and I need to make 1 million in 94 days, or, you know, my bank balance and my account balance is lining up for that, and my goals are lining up for that, and that's what I'm seeing and speaking and believing, then I'm going to keep going. But I'm only taking the right trades and I'm only going for TP2 and stop loss if you're new. But if you're experienced, you're looking for those fair value gaps. You're looking for those support resistance zones, supply and demand, if you want to go into that as well. All right. Cool. So number 4 is proper risk management. And again, this is something that I broke down the other day. I don't want to confuse too many people, but that's something that you want to really start to understand. And my good friend that I'm bringing on next will go over that. And number 5 is know when to stop, right? Know when to stop is very key. I love when I see the people that, you know, they make £200, £300 because they knew when to stop. Okay. Because there's been many times I've been up maybe 10K and I kept going, kept going, kept going. And that 10K that I could have cashed out becomes £300 because I kept going and I didn't know when to stop. And that emotion of greed became apparent and I got sucked in and I'm just trading, 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 trading. You need to know when to stop, right? You need to know when to relax, reset, and go again for the next day. Okay. And the last one I'll give you is do not revenge trade. It ties into number 3, which is do not trade on emotion, but do not revenge trade. Okay. Because if you continue to revenge trade, you've seen that signal, you got in a bit too late, you've missed it now. And you're like, I need to get the next one. I need to get the next one. And we haven't even sent a signal and you're getting into the market. That's where you start to blow your accounts. And it's not on us when you blow your accounts. Because one, you're not setting a stop loss. And two, you're taking your own trades. So we've all been in that scenario many times. You could probably look back at the times that you've done it and it's not ended well. And I just want to encourage you not to do it moving forward because if you cut out these things and you start to apply the good stuff that we spoke about just now, then your profitability as a trader will go through the roof. All right, guys. So that's it from me. If you've got value, just let me know. If you have any questions, let me know. I think the chat box is open. I'm looking at the private one though. Okay, fantastic. Awesome. So cool guys, like I said, we're gonna get into the chart stuff now. So if you're brand new, that beginning sector was for you. If you're experienced, then this sector is for you. And if you're brand new, this sector is for you. You may not understand everything just yet, but things will truly start to click. All right, guys. So I'm gonna bring up my brother. We've been trading together. So I've been trading for 9 years. He's been trading for donkey's years. All right. He actually used to trade at hold on a second. Don't know how that happened or why that happened. But he's been trading for a super long time. He used to trade for the banks, and that's something that, you know, of course, you'll start to go into institutional trading if you're new. It's something that is always good for you to understand and learn. But he, again, coming from the banks, he understood all of that off the bat. We went through an academy together. He had a super amount of success in that academy, and it was just beautiful to see another brother just smashing the game. And if he can do it, so can you. And his mind, because I've been in the game for 9 years, but I look at people's minds and their intellect when it comes to the market. And what this gentleman thinks, how he sees things, how he understands things, how he speaks, he really can break it down in a great way. So, like I said, we sent out a chart earlier. We're going to really go over that chart and just break it down for you guys. It's going to go over a bit of fair value gaps and where we think the direction of gold is going. And if you have any questions about the chart that we're going to go over or any questions about trading whatsoever, please put it in the chat. He's going to be 20 minutes. We're going to wrap this up at 40 past, like I said earlier. And ladies and gentlemen, put some sevens in the chat for my brother. I'm going to make him co-host. He goes by the name of Leon Brown. I call him Billionaire Brown. We're manifesting it. It's happening. And it's all going to happen through trading. So guys, if you're ready to receive the value, if you're excited to hear from this individual, put some sevens in the chat for the one and only Mr. Leon Brown.
Montel, you are amazing, bro. Thank you so much for that introduction. And I tell you what, guys, please give it back to Montel for that amazing value that he gave us in terms of trading psychology. here taking notes myself. He said, study hard. He said, don't revenge trade. There was so much value that you gave us there, Montel. So I really appreciate that. Everybody give it up for Montel in the chat. Give him a fire, give him a seven in the chat if you appreciate that psychology that he's given you there, trading psychology. Absolutely wonderful. Thank you very much, Montel. I appreciate the opportunity just to be with you, my brother, and to speak to everybody that's on the call. As he said, my name's Leon Brown. My company is Elevation Trading, and I've got a small amount of hopefully value for you today with regards to the chart that Montel sent out earlier in the day. I'm going to talk to you a little bit about support and resistance and how support and resistance moves into understanding the trading zones, which are on the chart that Montel sent out. And then I'm going to go ahead and talk to you very briefly about fair value gaps, what they are, and how we can potentially use that. I'm going to try very hard to get this into the next 15 or 20 minutes, but you don't have to worry, everyone, because if we don't get it done in this 15 or 20 minutes now until 22, then we will be back next week. We're going to try and make this as regular as possible. Montel, that's cool, right? We're going to try and do this as regularly as possible for everybody in the group, right? Okay, cool. So let's get it started. I'm going to share my screen. And what I've done, I've taken Montel's chart and I highly recommend that you do exactly what you're going to see here. As you can see on the screen, it should be coming up now. This is not the chart that Montel sent out to you. All right. But what I have done, all right, is I've looked at the chart that Montel sent out to us all today in the chat. I've looked at that and I have copied the zones onto my own trading view. I think this is huge, everybody. All right. You can write them down on paper, but still, there's nothing like actually taking the zones that are sent out in the signal group and then putting them onto the charts yourself. So here are the zones. Now, before we get to how these zones work, I want to tell you a little bit about support and resistance. Basics today. We're not going to go into the deep theory of how the institutions do it and why they do it. We're not going to go into that today. We're just going to go into the basics of what support and resistance is. So I'm going to draw a thin box around this level, and I just want you to keep your eyes on it. I'm going to draw a very thin box around this level. For now, I'll delete this one that is below it, and I'm going to give this the same color as my zones box up here. Now, what do you notice? What do you notice? While the price, watch this, everybody, while the price sits below this zone, the zone acts as a ceiling. The price cannot get above here. Here's the first attempt. The price cannot get above this zone. It moves away, and then shortly after that, it touches the same area again, a little bit higher this time, but it still can't break through the zone. And so the price pushes away again, tries for a third time right here and cannot get through the zone, pushes away again on this bearish candle right here. And then only on the fourth, maybe depending how you count, only on the fourth or fifth time of trying is the price able to break through this zone here. So while the price is underneath the zone is acting as resistance. I hope everybody can understand that. While the price is beneath the zone, then the zone is acting as a resistance and the price can't get through. Now look what happens when it finally does break through. The exact same area on the chart, now protects the price from moving lower. Here you can see the price doesn't go any lower than this zone to start with. And we're looking at the candle closes here. It moves away, comes back, tests it again, moves away, come back, tests it again with a little bit of wick doing some damage. That happens a lot. And then bang, moves away again. So while the price is underneath this, the zone acts as resistance. And once the price has moved above it, the zone acts as what we call, I'll put it here, the zone acts as support. I hope everybody can see that. And I'm going to show you again on another example, right? Price below, it can't break through the ceiling, everyone. It can't get through the ceiling. This is an area of resistance. But after it breaks through, the same area, the same zone now acts as a support for the price. It can't go any lower. All right. I'm going to show you the same thing again in a completely different area. If I just take this line, I'm going to copy it and drag it up right to approximately here. Approximately here. Let's look at that. Price is below the zone. Price is below the zone. and it cannot get through. And so it pushes away. Comes back, tests it again here, and pushes away. And only on the third time of asking this time does it break through this zone. In fact, it tries to plays around a little bit, and the proper break is here. This is the proper break of that price through this zone. So let's count them. Test. Test again. The price is acting as resistance. I'm going to copy this and put it over here. Resistance. The price is acting as resistance here. When it finally breaks through, the same zone now protects the price from falling lower and literally is doing that right now while we speak. Protects the price from falling lower here, protects the price from falling lower here, protects the price from falling lower here, and here, and here, and here, and here, and again over here. And what we're seeing right now is a response to the exact same zone that has been in play since last week, Friday. Now, the price above the zone is being supported. So below, when the price is below, the zone acts as resistance, and when the price is above, you can see that it's acting as support. I hope that's really clear. Now, why is this important? We're doing well for time. We've got 10 more minutes. I'm going to tell you why this is important. Because what your signal provider is doing, what the boys are doing in the team, is that they're giving you advanced warning. They're giving you advanced warning of where the support and resistance zones are likely to appear in the marketplace. So, price is below, let's take this one. Price is below this zone, which Montel sent out to you earlier on. It's below the zone. What do you think, based on what we said here, price below the zone acts as resistance. Price below the zone, it acts as resistance, for a while at least. What do you think is going to happen when the price reaches this zone here? I tell you what I think is going to happen, and what the guys are helping you with in your signal trading is we think the price is going to act as a resistance to start with. It will bounce off this area. Try again, bounce off this area, and try again, bounce off this area. So that's where you get your signals. And when they go into the group and they said sell here, and this is your take profit, these are your take profits, they're saying it because they have studied the charts and they know where the strong support and resistance exists in the marketplace. Now, what happens when we break higher? When we break through, as we eventually will do, then this same area is going to act as support, and they can use the same area to now say buy from here, buy again as we move higher and higher as the price goes through. All right. So I want you to be conscious of the support and resistance zones. You're going to see these in the signals. The zones will be given to you in the signals. And my recommendation is that you actually go ahead and mark the zones on your own charts in the same way as I've done it here. Let me quickly show you how to do that. You should take somebody who's drawing on screen, just delete that, please. I know it's most probably an accident, but if you could just undo that. Thank you. Thanks very much. Oh, 1 second. We'll take these off for the time being. Okay. Thank you. Montel, maybe if you can disable everybody from drawing on the chart. Thanks, mate.
On that for you now, bro. No problem.
Appreciate you. Thank you. All right. So what was I saying now? Kind of lost my train of thought there. I was saying, yeah, this is how you do it. All right. This is how you mark the levels. Okay. They will be in the zones chat. So all you need to do is create a box. It can be any color box that you like and draw it on the screen. Now, what I'm going to do, I'm going to tell this box to appear up here between 74740 and 7444. All right, and I'm going to show you how I do that. I double click on the open, and this gives you coordinates. It says, at what price do you want this box to be? So I want the bottom of the box to be at 4740, 4740, and I want the top of the box to be at 4744. Right, 47. All right, and if I do it like that, you can see the box appears right up here. So you can move it around like that, you can move it around like that, or you can type in the coordinates. Now, one more thing for you. How do you get the box to extend into the future and into the past? Use these two bars here. For example, if you want it to go back, you can do 5,000, and that will go very far back into the past. And then if you do plus 5,000, it will go far into the future. All right. Now you've got your zone marked up on the charts, ready to see where the support or the resistance lies when the price gets there. All right. And you tie this in to the signals that are coming into the chat. Okay, cool. Is everyone good with that? Everybody okay with that? These support and resistance zones are very, very strong. Highly recommend that you mark them up like this when you get them from the zones chat. Okay, let's move on. What is a fair value gap? If you know what a fair value gap is, just give me a one in the chat or give me a two in the chat so I can see that you're actually aware of what a fair value gap is. I can see a few people know. Really good, really, really good. Thank you, David. Very useful information. Cool, cool, cool. All right, good. A lot of you know what a fair value gap is. Somebody says no clue. All right. A fair value gap is a really, really powerful tool that we use in the financial markets. And again, I'm not going to go into the details of how they work, why they work. We can save that for another time. But I just want to show you the pattern and show you a couple important fair value gaps that are sitting on the charts right now. Okay, cool. A fair value gap is a three candle pattern. There are really, really strong ones. There are not so good ones that you can use. We can cover the best ones to use at a later date. But a fair value gap is a three candle pattern. So here's candle number one. All right, the price opens. Let's call it a bearish candle. Opens here, makes its high, drops to its low, and then closes right here. Okay, that's the sequence of how this candle formed. So what will then happen is that we'll get another candle which opens here. I want you to imagine that this candle has got a wick on the top like this, and also a wick on the bottom over here. Okay, cool. Now this is where it gets important. We're going to see another candle form after this one has closed. These are two bearish candles. We're going to see another candle form after this one has closed. And then watch this. I want you to pay very close attention to the wick that I'm going to place on the top. There's the wick on the bottom. We're not too worried about that one right now. But look at the wick on the top. This is the real key. All right. There is a gap that exists inside candle number two. And the gap is formed between the bottom of the wick on candle number one. That's the bottom of the wick on candle number one. Let me just mark these candles actually. Let's make it a little bit clearer. This is candle number one. This is candle number two. This is candle number three. Okay. Three bearish candles. We've got a gap between the bottom of the wick and candle number one. And look, if I drag this down here to the top of the wick on candle number three, you can see that candle number two has got a space in it. There's a gap there where the wicks do not meet. Where the wicks do not meet. Now, let me show you how this could change. If this wick was lower, like this, then the gap would be smaller. I hope you can see that. If this wick was slightly higher, but they still haven't met, then the gap would be smaller. At the point where the wicks meet, at that point, there is no longer a gap. The gap has been closed. All right, I hope that's clear. You can do that again. Let me just make these go back to the beginning. This was the original gap. Look, here's the space. Here's the gap in the candle. See that? That is the space in between the bottom of the wick on candle number one and the top of the wick on candle number two. That's the space. Now watch what happens to this space if the wick was to go lower down. Then that space is now smaller. I have to try and fit it in. The drawing might not actually fit now because I can't squash the drawing. So I'm going to remove the drawing and just use the lines. What happens if the wick on candle number three happened to have been higher? Then again, the gap would be smaller. And if the wicks actually met like this, then there is no gap. Now, these fair value gaps happen in bullish markets and in bearish markets, and they are hugely, hugely important for us to pay attention to. I'm going to clear off some of the support and resistance stuff so that we can look at the fair value gaps here. All right. And I'll leave this one because it's very interesting. It's actually playing around a support and resistance, a support area right now. So I'm going to leave that on the chart while we talk about fair value gaps. You can see, Montel, I might run over by about 2 or 3 minutes, brother. All right, just by maybe no
You're all
more than
good, mate. Guys, if you're getting value, just drop a 7-7 in the chat. If you want Leon to keep going, if you want Leon Brown to keep giving these
that.
gems, just drop a set. Mate, look, there's your answer. There's your answer.
All right, bro. Trust me, we're only just getting started as well,
Right?
Monty. No, we're
I
only
know.
just this is just like level 101. Okay, cool. I'm gonna go on for another 5 minutes or so. Let me show you that sequence happening in a bullish scenario right here on gold. We're looking at the 15-minute chart. I want you to look at these three candles here. Candle number one, candle number two, and candle number three. Okay? I'm going to zoom in just a little bit. Candle number one, candle number two, and candle number three. You can see that from the top of the wick on candle number one, remember this is a bullish one, the example I gave you was bearish. So from the top of the wick on candle number one to the bottom of the wick on candle number three, there is a gap inside candle number two. Hope you can all see that. Remember as well, guys, trading, I say this all the time to my students. Trading is a language of your eyes. Okay. It's a language of your eyes. It takes time to see these things. And I don't want you to worry or panic if you don't see them naturally. You just have to go through and keep training your eyes. And the more you practice, the more you study, then you're going to see these much more easily. The key here is that here's the gap, and gaps need to be filled. Gaps need to be filled. So follow the price action. Gap forms, price moves away, comes back, price doesn't go into it, it moves away again, and only here does the price run into the gap. And at this point, we say at 50%, but at this point, we say that the gap is now closed. I'm going to show you two more, and then we're going to wrap it up for today until next week. Here is a tiny fair value gap. We call them imbalance in our community, but it's absolutely the same thing. Doesn't matter what you call it. Our community, we call it imbalance. There's reasons why we call it that. A lot of the trading world calls them fair value gaps. There's reason why they call them that, but they are the exact same thing. It doesn't matter what you call it. Here's a really small one. It's a candle number one, candle number two, candle number three. Right from the wick, top of the wick on candle number one to the bottom of the wick on candle number three, you can see that there's a tiny little space. Even as I zoom in, you can see there's a tiny little space that exists between the wick on candle number one, the wick on candle number three, inside candle number two. Price runs away, tries to come back to it, but doesn't, runs away again. And here, over here, the imbalance or the fair value gap gets filled right here. Okay. The important thing about gaps is that price must come back to them. Price must come back to the gap because the market needs to be balanced. That's the reason why we call it imbalance. I'm going to show you one more, and this is the last one I'm going to show you because this is pertinent to where price is right now. It's right in the middle of your screen. Right in the middle of your screen. Here's the wick on candle number one. We found three bullish ones actually. All of them are bullish at the moment. There's a nice bearish one here. Candle number one, candle number three. There's a gap in the middle of candle number two, which gets filled over here. But right now, this one here is not yet filled. There's the gap on candle number one, and there's the wick on candle number three. This imbalance is not yet filled. Now, we draw this in a slightly different way, but let's see. In fact, look, it just got filled in the last 45 minutes, literally just now. While we're talking, the price, while we've been on this call, because we've been on this call for nearly 45 minutes, the price has come back into this imbalance here. All right, there's the gap. Now, the way I draw my imbalances so I can see them clearly on the chart, or the way we draw fair value gaps, it does, excuse me if I call it imbalance, it's just what I'm used to saying. They're exactly the same thing, all right? The way we draw these FVGs is I draw them with a nice blue box so that I can always see, okay, blue box means imbalance. Blue box means imbalance. I'll show you one more just because it's nice and sitting right there on the screen. There's one right here. And we wait for the market to fill these imbalances. Now, how does this help you with your signal trading? You've got to be able to do a little bit of chart work if you're taking these signals, okay? You've got to be able to do a little bit of chart work. It's too simplified, in my personal opinion, just to blindly copy. You can do that to start with, and that's the way many people get started in trading. It's just copy exactly what the signals do. But you're going to be a better trader you're going to take more advantage of these signals if you do a little bit of chart work. You're going to grow your account if you spend a little bit of time understanding these charts and how we look at them. Montel doesn't simply just want to be giving you fish every day. He wants you to be able to fish for yourselves. He wants you to be able to understand what's going on. And the more you understand is the better you're going to be able to use these signals, okay? So take a little bit of time, do some chart work, start by marking up your zones, right? Start by marking up your zones. Shown you how to do that. And then if you can start looking for fair value gaps, then you can do that one as well. Next week, I'm going to show you an indicator that will help you with the fair value gaps. And we'll go into some more content about how we can use these to our advantage as traders, okay? Hopefully that was useful for everyone. I really, really hope that was useful. We went a few minutes over. But as I said, my name's Leon Brown. My company is Elevation Trading. I'm going to ask you for one thing. Montel, can I ask for one thing? I'm going to ask everybody for one thing,
Of
yeah?
course you can. Of
Okay.
course you can.
Here's my one thing. If there's any value that I provided you today, could you do one thing for me? Take out your phones right now. You can actually see our Instagram tag right here in the bottom left-hand corner at Elevation Trading. Would you be kind enough just to drop us a follow? That's all we're asking for. Drop us a follow on Instagram, and we'll be really pleased to stay in contact with you that way. We do have an academy. Don't worry about that for now. You hear about that in the future, but for now, just drop us a follow on Instagram, and we will really, really greatly appreciate that. Thank you, everyone. Montel, we'll be back next week. Okay, I'm going to hand back to you.
Guys, ladies and gentlemen, if you got value, just put a 777 in the chat. I'm so fired up for that, man. Leon Brown, thank you for your time, brother. You are a wizard in the charts. You're an absolute legend. And
Love you.
guys, look, there's so much value I got from that call. Trading is a language in your eyes. Look, guys, I've been trading for 9 years. I understand exactly what you're saying. But sometimes when you hear these things back, it's like, boom. Light bulb. It's literally a language. And guys, this is for you that are brand new. Once you start to see certain patterns, they happen again and again and again. So Leon Brown, thank you so much, brother. Guys, this value, this whole community, this whole chat, this whole community that you're a part of, we are not charging you. Right? So, like when I started trading, I had to deposit £1,000 and I needed to pay £300 to start, 350 to start, and a monthly subscription of £300. You guys are getting all this value for free. So when I say times have changed and they are blessing you guys, I'm not joking. Do not take it for granted just because it's free. Take this game and apply it. If someone said this game could make you a millionaire tomorrow, you'd be taking notes, you'd be doing everything you can, you'd be applying everything we're saying to get to that million. And I promise you, this can do that for you. It's now your time to put in the work. So guys, we'll be back again next week, Monday. Leon Brown, if you can confirm that for me. Guys, if you want to see Leon Brown next week, put a 7 in the chat, please. You're probably tired of typing sevens. But if you want to see Leon Brown next week, I mean, Leon, man, the
I'm there,
chat is
bro.
going
Trust me.
crazy right now.
For you, Montel, I'm there. Done. 7 o'clock next week, Monday. Let's get it.
All right, guys, we are over now. I'm gonna end it right there. God bless every single one of you guys. We're here for you. We want to see you guys win. We'll be back Monday. We got the next trading call on Wednesday at 1:30. Plug in, be on the charts with us, and let's get you to where you need to be. Let's make that money. God bless, guys. Let's go.